Alright guys, so in my last video, I talked about the ways in which you can go out on your own, pick up everything that you have and put your energy towards opening accounts on the African continent for you to start investing in various stock exchanges. But of course, some people always want to figure out whether there is a way to have a workaround around most of the stuff that I say. So one of my friends approached me and said, well, but aren't there any ways in which you can invest from the US and invest in African stock exchanges and be able to get an exposure to African markets without going through the hassle of having to open brokerage accounts yourself, without going through the hassle of figuring out who are the registered brokers in each African countries, how can you contact them, do you trust them, what risks are there, and everything else? Well, the short answer is yes, and this is what we're going to talk about in this video. But then the long answer is that it's gonna need a little bit of explaining for me to do so that you figure out if you are someone who is in the United States. This video is particularly for those in the United States who might want to seek exposure to African equities while using their US brokers that they have used. Of course, I'm going to assume here that you're going to also do your research on which brokers in the US can give you access to the types of facilities I'm going to talk about in this video, but let's go. Now, to start with, I'll just summarize the types of headaches that the person who asked me to make this video flagged. There are a couple of headaches that you have to go through if you're going to go out and venture on your own and try to figure out brokers which you can use to invest on the African stock markets, different African stock markets. Well, the first one is foreign currency risk, which is that when you are earning in a different currency, for example, for this video, we're assuming you're earning in US dollars, and you might want to go and sort of buy stocks that are listed in Zambia on the Lusaka Stock Exchange, and you want to figure out ways in which you can convert your US dollars to the Zambian kwacha. There could be a different foreign currency risk that's involved. Various risks are involved. Of course, the bank that you use here in the US to send money to Zambia will charge you for converting in foreign currency. When it gets to Zambia, unfortunately, the banks there will charge your broker again, and you end up losing a considerable amount of money when these conversions take place. And this is something that if you're really serious and if you're really someone who is frugal and want to make sure that you minimize your costs in investing, you might not want to do this. The second thing involved is that, of course, there is too much bureaucracy. The video that I'm talking about, which I posted last week, is something that you would realize that there is a lot involved. You're going to have to do research on which brokers are best for you. You're going to have to do research and figure out if your broker is still licensed by the stock exchange in the country that you want to invest in, and so many other things, sending emails to them, waiting, following up. There's just a lot of bureaucracy involved which you might want to avoid here, and this is something that might lead you to try to figure out ways in which you can invest from the US and gain an African exposure without actually contacting brokers who are on the African continent. The last thing that the person who made me do this video asked for is that they were saying that their money transfer charges, as I talked about, which is quite linked to the foreign currency risk thing that I talked about at the start. The bank you have in the US, you're going to be doing international wire transfers. You're going to be charged for that. When the money gets to the destination, to your broker, they are also going to be charged to that. You add all those charges, that's going to pile up some point if you're someone who is concerned about your fees and you really want to keep your fees of investing really low. So what is it that you can do? What are the resources that are available for you to be able to invest in the US without leaving the US and using your US broker? I'm going to assume that you can get exposure to a big broker like Schwab or something like Fidelity. These are brokers that can give you access to these resources that I'm about to talk about. Now, the first thing is that I'm going to talk about two things. I'm going to talk about American Depository Receipts, and I'm going to talk about ETFs. American Depository Receipts, or ADRs as they might usually called, this is something that's very interesting. It's an interesting product in which a broker in the US actually manages to go and get some shares of a company in Africa, for example, for the purpose of this video, in Africa, and be able to come and sell them in the US as if they're US stocks. Okay, get me right here. I'm going to use an example of MTN, which is a South African telecoms company that is actually traded on the New York Stock Exchange. So for example, what happens is if I have a brokerage business in the United States. And I really feel that my clients or anyone else in the general market, there's sentiment that people want exposure to MTN, which is a very successful African telecoms company. As a broker, what I do is that, for example, I go and buy 5 million shares of MTN in South Africa. I buy them, and I buy them in the book of my brokerage house. And what I do when I come with those 5 million shares, of course, I don't come with them because these are no longer physical certificates, it's electronic. Once I have ownership of these 5 million shares, I go and deposit them in Bank of America, which becomes where I put my securities for the purpose of safekeeping. I essentially hand them off and I say, look, I want you to keep these. And then what I do is that I use a different bank and I say, well, Wells Fargo, what I want you to do is I want you to issue me an equivalent of 5 million shares that I'm storing at Bank of America. They are no longer mine because I need to be able to release them out to people to trade this. So Wells Fargo issues certificates that are US certificates that are equivalent to the amount of money that I am holding as I'm keeping my shares in Bank of America. When this happens is that I now have exchanged shares, really certificates that have been issued by Wells Fargo, which I can then put out into the market and people can start to trade this. So for example, when you search out American Depository receipts, and of course I'm going to link some resources below in the description, you see that you can be able to actually gain exposure to some African companies, especially if you're interested in bigger markets like South Africa. You might be able to get, for example, exposure to MTN, which I talked about. You might be able to get exposure to something like Sasol, which is also a giant chemical manufacturer in South Africa. You'll be able to gain exposure to some companies using American Depository receipts. So this is sort of like the broad explanations of what ADRs are and how you can gain exposure to African companies while still being in the US. So what you do in this case is that if you actually just want to invest in MTN, then you just go to your broker who, if it's Fidelity, for example, you just go to their online where you buy all your securities, you just search for MTN South Africa. It will pop up and you don't have to care who issued this ADR or not. This is now, for all intents and purposes, to simplify it, it's now it's actually now a US stock. So when you go out to your portfolio, when you go out to your online account of Fidelity and you type in MTN, this stock will actually pop up as if it is one of the US stocks that are actually listed and traded in the US, just like Facebook. And you can be able to, as an investor in the US, buy and sell these American Depository receipts as if you were actually buying them from their parent company in Africa. This, of course, brings so many advantages, which I'm just going to list just 2 of them here. The first one, of course, is that these shares are listed in the US. You don't have to worry about a lot of risks that are involved. They are issued and backed by a US bank. The dividends are also paid out in US dollars, which, I mean, the dividends technically are paid in South African rands and then they get converted and then your broker brings them to Bank of America. You don't have to worry about the whole back office process. What you just have to understand here is that your dividends will come in US dollars and you will buy these shares in US dollars, and when you sell them, you'll be able to get US dollars in your capital gains. So this is something that simplifies the process for someone who wants to get exposure to African equities while still being in the US. You're someone who is in the diaspora, you're an African, you love African stocks, you love the African growth story, but you don't want to go through the headache of trying to find a broker in each and every African country. You can get exposure using this way, and this is so much of an advantage. Of course, another advantage is even that they are regulated. Depending on what level of ADRs they are, what are called level 2 and level 3 ADRs are actually regulated. What that means is that they actually then get to be regulated by the Securities and Exchange Commission in the US. They report their results in US GAAP, which is generally agreed or accepted accounting principles in the US. And also they even give out investor news and memos in English. For example, if this company, was in Tanzania and they report their financials in Swahili and you have no idea how to read this, but if they are actually going to have an ADR in the US that's level 2 or level 3, then they will actually issue some of this information, if not all of it, in English translations as well, which makes it easy for investors. Now, of course, American Depository receipts do not come without disadvantages. Otherwise, everyone would be buying them, and of course, I wouldn't and many other people wouldn't be going through the hassle of opening their own accounts on the African continent. The disadvantages, of course, the first one you might actually recognize from the face of it is that there is a possibility of you facing double taxation here. Depending on how the tax structures end up being done, what happens is that you have to understand on the underlying ground, your broker initially bought shares in South Africa and then they brought them to the US. When the dividends are paid, there is going to be taxation on the South African side. When they come with them here and then they pay out the dividend to you, because it's considered a US security, there is still a possibility that you can be taxed. So you end up being taxed in South Africa and you end up being taxed in the US as well. And definitely that's not something that investors want, because they're always trying to keep their fees low and want to make sure that their real returns are high enough. Well, the other disadvantage with this is that there is actually a limited number of companies that are African companies that actually have ADRs that are listed in the US. As I said before, it's mainly something that gives you an exposure to bigger economies like South Africa. But if you're someone who is really interested in getting into the depths, the real depths of African stock markets that are underexplored, talking of something like Malawi, Zimbabwe, something that has given incredible returns to investors, you are unlikely, unfortunately, to find companies that are within this range. And even talking of South Africa itself, which is a big economy, ADRs mainly give you exposure to the bigger companies like MTN. But if you're someone who is interested in mid-cap stocks or the smaller stocks, smaller companies which still have a bigger margin to run and grow for capital gains and even for dividends in future, then unfortunately you might not be able to gain this exposure using ADRs, because ADRs are very, very limited in scope. Now, American depository receipts are not the only way for you to gain exposure to Africa. Of course, investors who are very much into diversification would understand that there are also mutual funds and electronic traded funds, which can give you access to wider geographies and wider economies. This can be the second step. If you're someone who, of course, doesn't want to really go through the headache of figuring out which ADRs are there and then trying to figure out the underlying business that's underlying. If I gave here the example that I've used of MTN, you don't even know what MTN does, where it does its business. You don't know whether it's a good business. If you have other factors that you can be concerned about, and it will give you a lot of headache, and you just want to gain exposure to Africa without asking so many questions and doing a lot of critical analysis, then you can gain exposure to some ETFs and some mutual funds which can give you access to the African continent. Of course, ETFs do take a broader view. What they do is, for example, if I'm sitting here and I really think that people want exposure to Africa, what I can do is that I can create an electronic traded fund which buys the top 5% stocks in terms of market capitalization in every African country. We're talking of about 20 or 25 stock exchanges. Not all 54 countries have their own separate exchanges. But let's say I go and buy the 5 biggest companies in South Africa, I buy the 5 biggest in Zimbabwe, I go up Botswana, Zambia, going up all the way until I get, to Egypt, just buying the top 5 biggest companies in each economy. And then when I do that, I create my own fund, which I now sell to investors and give them exposure to these underlying businesses. This is exactly what happens with ETFs and mutual funds. And what happens there is that it gives you access to all these underlying businesses that you might not otherwise have had the possibility of getting an exposure to individually. In fact, on the broader scale, mutual funds and ETFs can even be a better way for those investors who want an exposure to Africa but are still learning about the markets and still learning the ropes and figuring out which ADRs they want, or figuring out which companies or economies they want to get into. The thing is, when you get an African ETF, when you get an African mutual fund, some of the resources, of course, that I'm going to link below, it gives you a broader access. It defines to you what geography it is. Is it giving you access to sub-Saharan Africa? Some give you access to sub-Saharan Africa, except South Africa, because usually South Africa distorts those figures, and usually most of the funds that talk about Africa are very concentrated on South African market given its maturity and everything. But you then have to figure out what you want. Do you want an exposure to the frontier markets, the really small markets, or you want an exposure to just the bigger markets, South Africa, Kenya, Nigeria? And then you figure out at that point which African stock index or which ETF you want. So this is something on a broader scale. Of Of course, just like I did with ADRs, I'm just going to run through some advantages and disadvantages of this when we talk of index funds giving you an exposure to the African continent. The first advantage, of course, for index funds or mutual funds or ETFs that have underlying businesses on the African continent is that they offer you diversification. As we're talking about here, if you're going to buy an American Depository receipt, you want to buy one and probably it's going to cost you some money, but you probably end up buying 10 or 100 shares of these receipts, and you only gain exposure to one underlying business. Of course, if this business goes bust, if something happens on the African continent, or if something happens with regulatory issues, or anything that can happen with businesses, or another global pandemic comes and then this business goes out of business, then you might lose all your money in this case when you're talking about the underlying business being wiped out. But if you gain an exposure, for example, to 15 different African economies, and you're gaining an exposure to the 5 biggest companies in each of these 15 different African economies, then the chances dramatically lower that you're actually going to end up losing all your money, or that all these businesses are going to get wiped out in the event of a financial crisis, in the event of a pandemic or anything like that. The second thing also is that mutual index and ETFs are likely to be much more liquid when compared to individual American depository receipts. This is usually, of course, the fact, as I said that here, that most people want to gain an exposure to Africa, but they really don't want to go through the headache of choosing the individual companies. When you want to sell your index fund, when you want to sell your mutual fund or your ETF, it's highly likely that in some part of the world or in some part of the United States, there is going to be another investor who is going to say, you know what, I've just read about this great miracle that's about to happen on the African continent in terms of their businesses and the booming markets that they have, and I want an exposure to that, which makes them more liquid, that you can easily get in and get out of this if liquidity is something that you're more concerned about. So this is definitely an advantage that funds that give you a broader perspective to Africa will have compared to American depository receipts. Now, of course, mutual funds and ETFs also have their own disadvantages. The first one, of course, which I have kind of touched on in an earlier part in this video, is that they sometimes give you an access to only limited geographies and only limited range of companies. I'm talking here about the fact that you're likely to get access only to the biggest economies. You'll be lucky if you get something that's, a moderately small economy like Botswana or Malawi or Zambia. You're likely to only get an exposure to South Africa, Egypt or Nigeria, which are these bigger economies on the African continent. You're also likely to get an exposure to only sort of the blue chip, which is something like the biggest companies on the African continent or the biggest companies in each of these African countries that you have a broader exposure to. So it's unlikely that you get mid-cap stocks, which is something that some investors really love, given that these are still companies that have room to innovate and fight through the market, and they have higher chance of becoming the next blue chips of the future. So if you're someone who wants to figure out the great stories and the great mid-cap businesses, then this might not be something that would satisfy what you're looking for in terms of the funds, even, of course, just like it is in terms of the ADRs. The other disadvantage that you face here with funds is that funds usually have a management fee. As I was explaining how funds worked, I think you realize that someone had to go through the whole process of figuring out which companies they wanted to buy in which geographies, and then going out to buy those securities, bringing them to one place, and then starting a business in which they offer other investors an exposure to the underlying businesses that they would have brought together. Of course, this involves a lot of work, this involves costs, this involves many other things, and managing these funds and figuring out whether they're entering or exiting a market or a business or a region means that there is management that is actively involved in determining the strategy of this fund. And because of this, investors have to pay management fees to people who are actually running these funds. Now, of course, it would be quite unfair for me to end this video without talking about my own experiences. Of course, as I always say, I'm not a registered financial advisor. There are people who are qualified to give you advice. But what I do is that most people just want to know, so what do you do? It's not advice, it's not telling you what to do, it's just telling you my experiences. What do I do? Actually, I kind of have a mixture of both. What I do is that I really think that I want exposure to the great businesses and the great African stories that are out there. And what I've seen in reading and what I've seen in talking to brokers, who are the people who are quite knowledgeable in each African country, people who run these brokerage houses, people can, these men and women will tell you, of course, that, some of the companies that are really going to be the bigger stories, which is something that they don't just say, but it's something that they back with their research, which they can give you to read, is that you won't get exposure to these companies if you're just sitting here in the US and you're just, just investing in ADRs or just investing in funds. Of course, I do have companies that are in Africa that I have invested from the US. And these companies are great because these are great businesses. This reduces dramatically some of the risks that are involved, foreign currency risks. I also have an exposure to some funds that are on the African continent. And of course, this gives me sort of a geographical exposure to these funds. But then mainly talking about what really gets me tick, what really makes me wake up every day and continue preaching the African story and continue being happy and excited about trying to discover great businesses in Africa. This is something that comes from my accounts that I have on the African continent, or accounts that I'm working with, accounts which brokers really do give you sort of their reasons for buying what they're buying, backing it by research, and reading through this research and discovering the gems that are coming out in terms of companies in separate individual African economies. This is just something that, makes me go through my day enjoying it. And this is something that I really love doing. So definitely over the long term, I'm going to be focusing more on trying to get into as many markets that I can on the African continent, and talking to these brokers and learning and getting as much wisdom and as much intelligence as I can get on African markets. This is something that I will really devote my time to doing. But definitely, if you're someone who is still starting out, this can be an interesting way for you to start while sitting in the US, while still studying the African markets. You can start with index funds, you can start with mutual funds and ETFs. As I said, of course, the resources will be linked down in the description below. Once you get to say that you think you have had enough appetite in funds, you can go to separate American Depository receipts. Once you get to the stage where you say, you know what, I want more exposure and I really love the African story, and I think that this is where the next great returns will come in terms of big business, in terms of a booming population with great economies and fastest growing economies in the world, and talking of the next decades, if not this current decade that we're in, then you can then go on to the next stage where you actually figure out how to open separate accounts in African countries. Whether you decide to invest on your own, whether you decide to entrust your broker to invest in their own broker-controlled accounts, will be up to you. But of course, as I always say, I really think it's a great opportunity to get onto this continent. This is an amazing story, a story that will not be found anywhere else in the world. Most of the regions of the world have gotten to a point of maturity in terms of their markets and businesses. But when you get to the African continent, you will discover opportunities that will shock you. You will discover opportunities and businesses that are coming up and that are providing resources and services to people that are really critical, and services and resources which will keep making money for the foreseeable future for you, for the businesses, and keep helping economies. There cannot be a greater story than that. And I really hope in whatever you do, you will keep investing on the African continent and you will keep enjoying studying the great African businesses of our time and the great African businesses of the future. Until next time, my name is Maro.